worry that fundamentals are not going to improve, then what you're saying is absolutely correct. But our view is on a 3-year basis, we expect industrial production growth to go to something like double digits percentage. And we think that over a period of time, inflation will come down. And definitely in the next 2 years, we believe inflation will come down. And the combination of these two means normally in this kind of environment, equities do well. Now the question is whether the market is ahead of the economy, quite likely. But when the outlook for the economy is improving, and we expect the outlook for the economy to keep improving, markets will always be ahead of the economy. If you take even the down cycle started in November 2010, if I'm not mistaken. At that point of time, the economic growth was very high. And the market, if you see, the market was at that point of time saying that the economy was doing very well, but it kind of was just ahead. Then from 2010 October to, let's say, 2013 August, for 3 years the economy did badly. So then after that the market has been doing well and the economy will follow suit. So the question is, the day when we feel that the economic outlook improvement is not going to happen, that day is when we have to worry about. That's not the situation today. In fact, we are very confident of an economy improvement. And when we have seen that whenever you are confident of an economy improvement, you normally, it is safe to consider investing. See, what I would say is, just like in fund management, we have something called as a research process and a investment process. If you follow a good research process and investment process, fund performance improves. Like that here, if we see the right process being followed and the right steps being taken, I think the market will wait for the returns to come, results to come. So it will be just like, in fund management, you have research and investment process, and finally they have an outcome. Here you will see a set of steps being taken over a period of time, and those set of steps will finally lead to an improvement in the economy. Normally, this budget, the government has less than a month to actually plan for the budget. So what we believe is that what this budget will be able to do will be not as big as what would be possible next year in February, because you've got just 1 month to plan for this budget. But we would expect that the overall thrust to reduce fiscal deficit and thereby giving space to the monetary authorities to cut interest rates would be the most important. And unnecessary subsidies, if they come down, I think that would be a very powerful positive. But we are not expecting any earth-shaking reform from the budget which is due in July. That is why it is much easier, because India can be the best growth economy in the world. In fact, if you see the entire world, India is possibly the only economy where growth can accelerate and interest rates can come down. So you are in an extremely unique position. The last time you were one out of a big group of economies doing well. This time it is possible that India can be one of the only economies which are doing well, whereas the rest of the world is not doing too well. So I think the opportunity is just fantastic for in India, and it is possibly much better than the last cycle, because in the last cycle, because too many countries did well, commodity prices shot up, and that turned out to be inflationary. This time, because the other countries are not doing that well, you may not have a commodity based inflationary shock. What is different in this cycle, if you ask me, is not that. The cycle actually normally starts with very low interest rates. In India this time, the cycle is starting with higher interest rates. So what we expect is, in the next 2 years, interest rates have to meaningfully correct. And in our reading, that would be a very important part of the economy, I would use the word, the economic performance of India. So in the next 18 to 24 months, we have to see meaningful cut in interest rates in India, and which we are very hopeful of, because we think that it is possible that the government and the Reserve Bank together will work a set of policies which bring down inflation, leading to much lower interest rates.